All right. In this lecture, I am going to talk about horizontal analysis. Okay? Horizontal analysis is the review of financial data across time, right? So again, we're looking at how does this year look to last year, or how does this year look to 5 years ago, right? That's what we're talking about, horizontal analysis. The first thing we would do is we would do so there's maybe three that we're going to go over, three types of horizontal analyses. The first one is comparative statements. So the dollar change, right? So how did we change from our prior year? I think maybe the easiest thing to do here is the formula. Let's at least do that. I'm definitely wanting to ignore that. That's nonsense. But our percentage change is the analysis period amount, right? So again, we can use that terminology, but we can just change it to something that makes a little bit more sense. So we could say, hey, what's the current amount, like the current period, relative to the base period? In the base period, we can say last year, right? So what's the difference between this year and last year? And then let's divide it by the last year amount. So let's look at the change from last year to this year, and then let's divide it by last year. And then we multiply it by 100 to turn it into a percentage. Okay? So the example this is a good example, and it's too small. So let me just blow it up for a second and then maybe go this way. Yeah. And I'll lower my ugly mug. So I have first line cash and cash, bleh, cash and cash equivalents, right? So this is the prior year. This column is prior year, and this is the current year. So last year we had cash at 25,913. And then this year we have 48,844, right? So we increased our cash 22,931. And again, remember that was current year minus the prior year. And then we say that the percentage change is 88.5%. So we increased our cash by 88.5% over last year, right? And then I can do the same thing for short-term marketable securities. Last year we were at 40,388. This year, 51,713. The difference is an $11,325 increase, and the percentage change from last year to this year is a 28% increase. And so when I do this, I can then move down all of these different line items, right? So if I'm just looking at the raw dollars, okay, to me, obviously this stands out. But in addition, I can look at the percentage changes, right? So yes, this does stand out because it is the biggest amount, but it's a 38.3% decrease. But I do have an 88.5% increase that's also worth looking at. And so maybe the dollar amount isn't as big, but the percentage change over the prior year is definitely something to make note about. And I can then do the same thing for my liabilities. And I can quickly go down to liabilities and I can say, hey, there was a 17% decrease in my accounts payable. There was a 50% decrease in my long-term debt, commercial paper, right? So bank debt. Yeah, there was a 16.8% increase over the prior year. That's interesting. But this allows me to quickly identify things that are red flags or things that are interesting by putting them on a percentage basis, right? Retained earnings dropped by 34.8%, I might want to know why. Our common stock went up by 12.5%. Our other non-current liabilities, that was an increase of 3.2%. Am I really worried about that? Maybe not. But so by doing this horizontal analysis, putting things on a percentage change from the previous year or from a base year really allows us to quickly identify areas of interest. Okay, and then maybe I need to, yeah, same concept. Instead of using the balance sheet, we'll just use the income statement. And again, we're doing the current year compared to the prior year. So for sales, there was a $5,421 decrease. So our sales went down, and it went down by 2%. And if I were to go look through all of this stuff, I'm thinking this stands out to me. Maybe this stands out to me. This stands out to me. Right? So our R&D increased by 13.9%. Why? What happened? What did we do? Total operating expenses increased. Well, it looks like a large portion of that probably came from R&D. Selling and administrative expenses also went up. Interesting. And then my income taxes, provision for income taxes, that decreased. What happened? Was there a change in the tax law? Why is there a substantial difference with provision for income taxes? But a horizontal analysis is allowing us an opportunity to quickly identify things to investigate. We can do trend analyses, okay? And so trend analyses, it's the same concept. It's essentially the same concept. Instead of comparing the current year to the previous year, we're just saying we're going to compare, a year to a base year. And what makes the most sense is maybe this. I'm going to move my ugly mug over there. So what we're saying is 4 years ago is the base year, right? So we're saying 4 years ago, this is the base, right? So if I'm looking at net sales, my base is 4 years ago and is 233,000. And then I've got the next 3 years, 3 years ago, 2 years, well, the next 4 years essentially, right? Even the current year. So now I can say, hey, you know what? 3 years ago, we were at 92.3% of the base. 2 years ago, we were at 98.1%. A year ago, we were at 113%. And this year, we're at 111%. And so we're seeing trends. And we're allowing us to compare not just year over year, but the changes from a base year. Maybe there was something that happened 4 years ago and we said, boy, that's like the typical year, right? That was like everything that happened was the benchmark that we want to hit every year moving forward, right? So in terms of sales, the following year we didn't do so well. The 2 years out, we pretty much just about hit what we anticipated. A year ago, we did way better. And then this year we did way better, right? And now, again, it's allowing us to ask questions. What did we do in these previous 2 years, this year and the previous one, that led to an increase over our base? Maybe it was inflation. Maybe we found more customers. We sold more units, but it's worth looking at. And then finally, again, we can, instead of looking at things in percentages, we can look at things in linear fashion, right? So in my opinion, if I'm looking at this chart right here, I'm saying like, what the fuck is this red? What's this red line, right? Because I've got a green line and a blue line, and they look like they are moving in lockstep, but this red line is really taking off. So the red line is Google, and Apple and Samsung are the other two. So now, boy, it'd be really interesting to understand, what is Google doing differently than Apple and Samsung, right? And maybe it's the case that this isn't a great comparison. because they aren't similar companies. But if they were similar companies, right? If they were similar companies, we would maybe want to look at the red line to figure out, boy, what are we not doing? Or what are we do? Maybe we are the red line. What are we doing so well, right? This particular example above, we're saying, hey, listen, our operating expenses over time have been increasing at a faster pace than our revenue. What's that about? Our revenue is about 100% of where it was 4 years ago, but yet my operating expenses are 150%. What's happening? That is an interesting phenomenon as well. Right? So by doing these horizontal analyses, we can start to analyze a company. I can't determine what's happening just yet, but it is at least allowing me the opportunity to identify and investigate.